Good evening, everyone, and thank you for joining us for our virtual session all about insurance. My name is Barbara Agan, and I am the Director of Member Engagement and Education with ABCO Federal Credit Union. Our presenter today is Alexander Hanif, Relationship Development Manager with the Family Security Plan, and I will now turn the meeting over to Alex.
Thank you, Barbara. Thank you so much for having me. Hello, everybody, and thank you for taking time out of your day to join us today in our discussion on the benefits of supplemental insurance. So as Barbara mentioned, my name is Alex, and I work for a company called PSP. PSP is a supplemental insurance agency, and we provide benefits to credit union members known as the Family Security Plan. The Family Security Plan is available to all ABCO members. So during today's presentation, we are going to review the importance of having insurance, the different types of supplemental insurance that are on the market today, how much insurance coverage might be recommended, and also as well as the coverage options that are available to you through the Family Security Plan. So to get started, I want to briefly review what exactly supplemental insurance is. Supplemental insurance is privately owned insurance that someone can purchase to enhance or supplement the existing coverage that they may have through their employer or elsewhere. Supplemental insurance is not designed to replace existing life and or health insurance that somebody may already have, but rather to fill the gaps that might not be covered through employer-provided health care or life insurance coverages. Supplemental insurance has many different flexible coverage amounts and premiums to ensure that every family can find a coverage that is right for them, and most importantly, it is at a price that they can comfortably afford. There are a lot of different types of supplemental insurance that can protect you and your loved ones in a variety of different ways to ultimately ensure financial security. There are supplemental life insurance policies as well as supplemental health insurance coverage options that are available to you. So before we jump into the different types of insurance and the coverage options that are available on the market, I think it's really important to talk quickly about the benefits of why it is important to have insurance. So first and foremost, insurance is absolutely necessary because it is a financial security blanket to help you prepare for life's unexpected events. Insurance is essential to help you prepare for any curveballs or surprises that could ultimately occur in our day-to-day lives. And unfortunately, sometimes that happens when we least expect it. For example, an event like an unexpected broken bone during a leisure activity is something that we really don't anticipate happening or expecting to happen. But in the chance that it does happen, it could potentially bring someone large medical bills for, let's say, doctor's visits or rehab. Along with the possibility of maybe due to that injury, you're not able to go to work and bills are still due. Supplemental insurance policies can be there to help you minimize out-of-pocket medical expenses and can even provide you with monthly benefit payouts to help you stay on top of your bills if you find yourself in that time of need and unable to work. Let's say, for another example, in the event of a critical illness diagnosis or the unexpected loss of a family member. Insurance policies are the protective vehicle to ensure that a family is not financially devastated by overwhelming medical treatment bills or final expense costs. Insurance ultimately provides peace of mind by knowing that loved ones are financially taken care of, outstanding debts are paid for, and final expenses are covered during that time of need. Insurance can be used for a lot of different purposes. Insurance can be used to leave an inheritance or a legacy to loved ones. Life insurance plans can be set in place to leave benefit amounts to beneficiaries for financial stability. For example, insurance coverage could be used to pass on funds for important financial milestones, maybe for education expenses, purchasing a home, wedding expenses, many more critical life events. Ultimately, this money is designed to be there for your loved ones for what you want them to use it for. Insurance can help secure current and future financial goals as well. As we just mentioned, unexpected illnesses or loss of a family member can greatly impact not only the emotional well-being of a family, but also, unfortunately, the finances of a family as well. Insurance policies can help minimize the risk of financial loss in a time of need and keep you and your loved ones on track for your future goals. Now that we've talked a little bit about the different reasons as to why insurance can be important for your family, one of the primary questions is to determine how much insurance is actually needed to protect our loved ones and our financial securities. So there's a few very important points to consider. And the first thing that I want to stress is that every family has different financial needs and priorities. So when you're considering what insurance plans are right for you, it's important to consider some of these main points to identify which coverages may be best. So a few of the things is, do you have loved ones who are dependent on your income? If there are people who depend on us, we have to make sure that we have a backup plan if, God forbid, we are not able to be there to provide for them. Is your spouse and or children covered by life insurance because you have the ability to cover your entire family? Do you have coverage at work? And if so, that's wonderful. But do you also have coverage outside of work? And if you do have coverage, what types of coverage do you have? Does your existing coverage, if you do have coverage, does it expire? And if so, are you familiar with what age it expires at? And does your insurance policy have living benefits? These are just some of the few questions that you can ask when trying to determine how much insurance is right. You also want to make sure that you're covering the very critical points in your life and making sure that you are providing enough of a benefit amount to cover some key expenses, some of which are final expenses, such as cremation or burial expenses, leaving behind household responsibilities and monthly bills. If you are the primary wage earner in your household, you have to make sure that your family's bills are taken care of. Maintaining the standard of living for your loved ones. Children and grandchildren's future expenses, education, wedding, as we talked about, a home, a mortgage if you currently have one, or even if you rent. You want to make sure that those mortgage payments, that mortgage debt, or your rent payments are covered, where if, God forbid, something happened, you have a plan in place to cover those expenses. And any existing monthly expenses that you might have, car payments, student loans, phone bills, etc. So when we're looking at life insurance, there are many different types of life insurance that can be used for a lot of different purposes. One of the main types of life insurance that we're going to talk about today is whole life insurance. Whole life insurance is a permanent life insurance coverage option where the coverage amounts never decrease and the premiums or the cost of the insurance never increases. Whole life insurance is a permanent policy that can also provide you with living benefits and protection options while you are alive. We're going to discuss whole life insurance in a little bit more detail later on in the presentation. Term life insurance is also an insurance coverage that lasts for a period of time. Typically, it's between 15, 20, or 30 years. Term insurance provides a large benefit amount typically in the event that a loss of life occurs during such time period. Term life insurance can sometimes be renewed during the duration of the policy, or it could even be converted to a whole life insurance policy during that term period. Term, as a rule of thumb, is typically less expensive than whole life insurance when talking about coverages versus cost, but we also have to keep in mind that term insurance does expire after that period of time. In addition, term insurance also does not have fixed premiums for life, and it will increase as you renew your coverages and as you get older. Another popular form of life insurance is accidental death and dismemberment. Accidental death and dismemberment policies cover an individual in the event of a loss of life due to an accident or the loss of a limb. These coverages are typically very affordable, but they also offer less comprehensive coverage because the payout and the benefit is so specific to those particular events. Another form of life insurance is universal life insurance. Universal life insurance is an insurance policy that lasts for an entirety of an individual's life and can sometimes be referred to as cash value insurance. This is because a policy owner has the ability to determine how much they want to pay towards their insurance, and any excess premium payments that are made are accumulated into the policy as cash value. And we're going to talk about cash value in a little bit. When talking about life insurances, it's also important to understand the different types of underwriting that exist when purchasing an insurance policy. Underwriting is used to determine the eligibility for policies and coverages. So one of the popular forms of underwriting is what we call full underwriting. Now, full underwriting is the most comprehensive type of underwriting for insurance policies. Full underwriting includes a full paramedical exam from a medical professional. Full underwriting also includes a blood and urine sample to obtain coverage, and these health and medical exams are used to determine rates for the insurance premiums. Full medical underwriting is a lengthy process. It can take up to 2 to 6 weeks to finalize the coverage options and the rates once going through all of those different criteria with the medical exam and so forth. Another type of underwriting is what we call conditional guaranteed issue. Conditional guaranteed issue is underwriting that does not require a physical exam or a blood or urine test to purchase coverage. So this means that it's usually a shorter application, and it includes basic medical questions that are actually completed during the application to determine eligibility. And approval of coverage is determined based upon answering the questions honestly, of course, truthfully, and correctly. And with conditional guaranteed issue underwriting, coverage typically goes into effect immediately after the application is accurately completed and signed by the insured. Guaranteed issue is one of the last forms of underwriting. As the name implies, guaranteed issue is used for life insurance policies that are guaranteed to be issued. This means that regardless of your health, you cannot be declined or turned down. Guaranteed issue life insurance generally offers lower death benefit options. And again, when looking at the coverages versus the cost, it typically has higher than average premiums. This is because anyone can qualify for this coverage. So we've talked about some of the types of insurance, and we've also talked about the different underwriting options that can be used to determine eligibility and rates. So one of the major questions that I get, one of the main questions is the difference between employer-provided life insurance and insurance that is privately owned or supplemental insurance. So through your employer-provided coverage, if you have some, typically it is a set amount of coverage determined by your employer. So this is typically maybe 1 or 2 times your annual salary or a set amount. It could be something like $25,000 or $50,000. It depends on what your employer provides. Typically, it's very convenient to purchase because it's guaranteed issue typically through your employer. As an employee there at that employer site, you have typically guaranteed eligibility to have that coverage. And it's ultimately very cost effective. And this is generally a very high amount of coverage for the price that you're paying. And again, this is because typically the coverages that you have through your job are what we would call a group term insurance, and they are conditional to employment. So what that means is coverage that you have on the job, typically, for the most part, there are different coverages for every employer, but typically what you have while you're at that job stays with you. It stays with you only while you're at that job. If you were to change jobs, leave job, God forbid, lose your job, or even retire, sometimes that coverage does not go with you and it stays at that job. So in rare circumstances, coverage can actually be continued into retirement or renewed after you are no longer at the job, but then the premiums are typically adjusted and increased based on your employment status with that company. So as far as individual insurance coverages, these provide flexible coverage amounts, right? As we just talked about, there's a lot of different types of insurance and there's a lot of different ways to go about getting insurances that are right for your family. So with privately owned insurance, you're able to find the coverage amount that fits your needs and your family's needs. You're able to find a premium that fits your budget. And ultimately, you're able to find a type of plan that gives you what you're looking for based on your individual needs. This is also portable coverage, which means that it is portable and will remain in force if you were to change jobs, if you were to leave your job, if you were to retire. Coverage that you own outside of work will stay with you no matter where you are as far as employment status. Some supplemental or individually owned insurance policies are permanent protection plans, like that whole life insurance or universal life insurance that we talked about. And ultimately, this is very important to make sure that we cover is the coverages that are supplemental to your employer-provided coverage are designed to do exactly that. They supplement the coverage that you have. So if you do have coverage to your employer, it's a great thing to have. And privately owned insurance is designed to really just enhance that coverage and increase your financial security. So let's talk a little bit about the Family Security Plan and some of the coverages that are available to you. So as we talked about, the first one is whole life insurance. Now, whole life insurance, as we talked about, is a permanent protection plan, meaning it never expires and premiums, as long as the premiums are paid. Now, typically, the death benefits for these coverage amounts are given income tax-free to a beneficiary. As we just talked about, they are completely portable, which means that the coverages you have through the Family Security Plan go with you if you were to change jobs or retire. Through the Family Security Plan, the whole life insurance that's provided is what we would call conditional guaranteed issue. So remember, that means that there is no physical exam or fluid samples required to purchase that coverage. It also means that your coverage begins immediately. So when you sign and complete an application, you can guarantee that your family is protected once that application is completed. There's also very convenient payment methods. So you can actually pay for a Family Security Plan policy right through your ABCO account, or you can pick any account that works best for you. With life insurance, once you purchase a policy, you can be sure that the premiums never increase and the death benefits will never decrease. With that being said, the younger that you are when you purchase a whole life insurance policy, the cheaper the coverage is for your entire life. And as a member of ABCO, your entire family is eligible for the benefits of whole life insurance. So coverage options are available for you, for your parents, for your spouse, domestic partner, children, and even grandchildren. Spousal coverage begins as low as $3 per week, and children's policies are as low as $2 per week in premium. Again, these are whole life policies. So for a child's policy, that's $2 per week. That $2 a week policy stays at $2 per week for the entirety of your child's life. There are also a variety of living benefits that are automatically available on a policy at no extra cost. So we have a chronic care rider that provides access to a portion of the policy's death benefit if the insured was to become chronically ill and require either live-in aid or nursing home assistance. So that's an accelerated benefit while the insured is living. There's also a terminal illness rider which accelerates a payout as well, up to 75% of the death benefit in the event that the insured becomes terminally ill. Now, this can be used for any purpose that the insured chooses when they do accelerate that benefit. There's another rider called the waiver of premium. This is a popular rider, and what this does is this is where the insurance company will actually cover the policy's premiums if in the event that the insured becomes totally disabled and is unable to work. So as we talked about before, I want to quickly highlight cash value. So for those of you who are unfamiliar, cash value is something that accrues on whole life insurance policies. And basically what this is as you pay your premiums, you generate cash value in your policy, and this can actually be borrowed from the policy at any point in time while you are alive. And cash value can be used, it can be there as a resource for you for a variety of different reasons, ultimately whatever reason you choose. But some of the more popular reasons are maybe you want to put a down payment on a home, and that cash value can be there to provide that down payment. Maybe it can be used to take out a loan for higher education or to supplement retirement income, or maybe even be there for financial support during an emergency. The last thing that I want to talk about as well is what we would call a paid up life insurance policy. So every time you pay your premiums for life insurance, you actually are building coverage options that you can keep forever. So a paid up life insurance value is as you pay that premium, you can actually choose at any point in time to stop paying for your insurance premiums, and you can keep the paid up value worth of life insurance coverage for the remainder of your life without having to continue to pay the premiums. So for term life insurance, as we talked about, term is typically a coverage that is for a specified period of time, maybe 10, 15, 20 years. This is conveniently convertible, which allows you to take a term policy and turn it into a whole life policy. Just like with all privately owned insurance, there's flexible benefits and affordable rates that you can find something that works best for you and your family. And this is renewable. So after your term expires, you can actually continue to renew it up until age 90. There is also a waiver of premium and terminal illness rider on the term insurance coverages. Now remember, term insurance does not provide a permanent insurance benefit. So some of you might be wondering if term isn't permanent, then why would I want to purchase something that won't cover me forever? So everyone can purchase insurance for different reasons, but here's a few key life events where term insurance may be the best fit. For example, if you have small children or dependents, term insurance can be essential to protect a family's lifestyle and future expenses while children are small. If someone has large outstanding debts like student loans and or a mortgage, term insurance can be there as that financial support and protection to cover those debts if unexpected loss of life were to occur. So in summary, let's review some of the key benefits of whole life insurance and term life insurance. Overall, life insurance can be used for a variety of different reasons. And as we talked about, it can pay for final expenses. It can be there to provide for your loved ones. It can create a source of savings for your loved ones. It can pay off debts, and it can also supplement what you have through your work. Now, also the differences between term and whole life, just to quickly recap. Term is going to be a term period, either 10, 15, 20, 30 years, and it's coverage for a specified period of time. Whole life lasts forever. Now, with that being said, the amount that the policy pays out based on your coverage that you have typically goes on to a beneficiary tax-free. Whole life insurance has a level premium that lasts forever and it never goes up in price. Coverage never goes down, costs never go up. And you can also generate cash value on a whole life policy. So now that we've talked about the different types of life insurance, let's review some of the supplemental health insurance coverages available for you. The Family Security Plan and a lot of insurance companies that are out there in the world and on the market today provide supplemental health insurance. Now, supplemental health insurance, the three different types of supplemental health insurance coverages that we're going to talk about today are critical illness insurance, disability insurance, and accident insurance. Now, just like with life insurance and having privately owned life insurance, why do we want to have supplemental health insurance coverages? Now, if you have health care through your job, or if you have it outside of your job, but you own health care, supplemental insurance can help you cover out-of-pocket medical expenses that your health insurance coverage might not cover. Also, if you're familiar with copays, deductibles, and coinsurance, these can be very expensive without supplemental coverage. Depending on the coverage types, benefits can either be paid out to you with supplemental health coverage. They can either be paid out in lump sum or in a periodic benefit amount. And you can also purchase supplemental insurance at any time. So you don't have to wait for open enrollment to roll around with your employer in order to get supplemental health insurance. It's available for you at any time. When talking about critical illness insurance, so critical illness insurance is a lump sum benefit which is paid directly to the insured upon the diagnosis of a covered critical illness. So if, God forbid, an insured was to be diagnosed with a critical illness, which we're going to go over what those covered illnesses are on the next slide, what this would do is this would pay out a benefit anywhere from $10,000 to $100,000 tax-free to a beneficiary or to you to help make sure that you can pay for any expenses that you may have. This benefit is paid directly to you. So I just want to clarify that. That means that it's not going to the insurance company or the hospital. It's going to you, and that allows you the ability to use it how you would like. And just like with all of our other coverage options, you can pay for this either through an ABCO account or any account that you choose. Some of the critical illnesses that are covered through critical illness insurance are heart attack, cancer, stroke, kidney failures, multiple sclerosis, coma, benign brain tumors, ALS, organ failures, coronary artery obstructions, or carcinoma in situ. So there's a lot of different things that are covered through critical illness coverages. Disability income protection is a convenient and affordable way to ensure that you have income in the event that you are unable to work due to a disabling injury or illness. These benefits, just like with all of our supplemental insurance options, are custom for your financial needs. So you can pick something that's right for you. And essentially what disability income protection does is if you are unable to go to work due to a disabling injury or illness, this would provide you with a monthly tax-free benefit that can help you stay on top of your bills. And we have accident insurance. accident insurance is a great supplement to healthcare coverage because essentially what this is in the event of an accident, let's say I was in a leisure activity and I rolled my ankle and I wasn't sure if it was broken or not, and I needed to go to urgent care to get it checked out. What this accident plan does is this pays you money directly for any emergency care, fractures, hospitalizations, any kind of treatments or rehab that you may have when going to an urgent care, hospital, or doctor's office due to an accidental injury. So these cash benefits are paid directly to you, and they are designed to cover those out-of-pocket deductibles and copays that you may experience when going to a facility like an urgent care or a hospital. There's also a first accident benefit where if you are in an accident and have to file a claim for the first time, there's a $100 additional benefit that is paid to you for your first claim. And there's also a sports package. So this is very popular with families who have children who participate in sports, or if they themselves participate in sports, because through our sports package, which is automatically included, there is a benefit increase on the payouts of 25% if the injuries that occur while participating in an organized sport. And the same thing with a rehab package as well. There is also cash benefits for any type of rehabilitation that is required. There's two different forms of accident insurance. There is a plus and a platinum plan. Platinum ultimately doubles the amount of coverages or doubles the amount of benefit that you have if you have to file a claim. So I know we went over a lot of different information there, and I really appreciate everyone's time.
So on Friday or possibly Monday, I will send an email out, which will include a link to the recording. And also I'll have Alex's and MD's contact information. So that way, you can contact them directly, because I don't share members' emails, outside of the company, but certainly anybody who wants to reach out can do so.
Okay.
Absolutely, I agree. So Kanita, we'll send out that information for MD's phone number, and you can certainly give him a call. Or if you want to meet at a branch location, you can also send him an email and coordinate a consultation appointment, and we can go from there.
Okay, sounds good.
And sadly, I watched this presentation about 25 years too late, because it would have been nice if I would have started a whole life policy for $2 a week for each of my children, and it would have been a nice moving out and starting life gift. That's awesome.
Absolutely. And
Yeah.
Barbara, one of the things I didn't go over in the presentation, but with a child's policy, they can always get more coverage as well. So for example, if you were to get a $2 per week life insurance policy for a child, and let's fast forward 30 years, now they're an adult of their own, maybe they even have children of their own, they can then purchase more coverage, but still maintain that policy that you purchased for them when they were young. And they can still maintain that value of that $2 per week. So it is a really nice benefit.
Awesome. Well, thank you so much, Alex, for joining us on this program. I hope you found the information beneficial.